That's great short term and it's a lot of fun. But the bigger game here is that you have to get out of fiat currency. Otherwise, you're paying much higher tax rates than other people. And this deficit here in the US, and the UK is running a huge deficit as well, that deficit is essentially taxation. It's not tax, and everyone will say, no, it's not tax. I get that. But what you're paying for, right, with this deficit, when you're in dollars, is that the price of everything rises in relation to those dollars. And so that is a tax, right? Because when you come to spend it, you just have less than you thought. And they've basically taken away your purchasing power through this. The money has to be printed. This is only the US government. They're just one version of a corporation. Every government is a version of a corporation. They just have much more special powers than others. And the US government doesn't have to create a deficit, but the money has to be printed, right? So if it's the central bank, which always buys the government's debt in the end, so they'll just be printing the money out of thin air, or you have commercial banks who will be creating currency, printing currency against assets or equity or future cash flows. But you always have to keep this going, right? You always have to keep the currency printer going. And so if you're in the currency, you are paying this tax. And it's one of the biggest receipts in the US, 458 billion in the fiscal year 2026. That's higher than individual income taxes. This creates inflation in prices, which if you're in the currency, you are paying for. If you're in assets, your assets go up by at least this amount. They should do over the long term. And so you're not paying that tax.